You're looking for a soft-ish landing. Let's talk about the ish. Any evidence of that developing at the moment as you look at the incoming data?
Yeah, John, good to see you. I think there's a few things that I look at that give me a hope that we may actually have a wider path to a soft landing here. The first one is you look at the growth numbers. I mean, even with the OECD downgrading growth today, it's still a positive number. And if you look at the U.S., we're expecting 2.6% this year, 2% next year. This has not fallen off the cliff. It is still hanging in there. So yes, we're squarely in a slowdown part of this, but this doesn't yet have to be an imminent recession. You know, the second thing that I look at, and frankly, I've not been able to say that, yes, we have seen peak inflation and yes, this is it. But now I feel like there is more and more evidence building that maybe we are starting to see peak inflation. I mean, look at used car prices. They're starting to decline. Look at the businesses' intentions to continue raises prices. They just can't do it anymore. So more and more of them are saying we're going to pause. If you look at businesses' intentions to raise wages, they're pausing as well. So there's starting to be sort of a preponderance of evidence that maybe inflation is in fact easing. And this is commodities notwithstanding, but the other inflationary pressures seem to be easing. And then the third thing, John, that really gives me some confidence that maybe we can engineer a soft landing is the Fed is starting to sound a little bit more balanced. Yes, of course, they need to fight inflation, but maybe it doesn't have to only be by raising rates well into tightening territory. You know, maybe they can pause and let the high prices naturally bring down demand. So I think if they back away just in time, we might end up with a 94 scenario versus the 70s.